Good morning, everyone. Hey, kiddo, how you doing? How's everybody doing? Rise, Joe. What's going on? I'm being very lazy this morning. I'm just going through the charts. Very lazy. Ian, how are you? You feeling better, brother? Hope you're feeling better. It's okay, it's Christmas. You could relax. Oh, man, it's been a good year. It's been a good year. I know, we get older and it's crazy. So, what do we have here? Our overnight inventory. It's getting a little short now. Inside yesterday's range, inside yesterday's cost basis. Um, let's see what, we are, yeah, in it yesterday's cost basis, back and forth. We still have this gap that did not fill yesterday. And from what I saw of the trading yesterday, it was very sort of slow and measured, which makes sense. There's really nothing going on. Uh, we won't be doing a stream tomorrow in RTH. I doubt, I don't know about you guys, if you want to do a stream in the morning. Um, I'm up to do a half an hour. I'll do a half an hour today just to keep in contact with you guys. There'll be no RTH stream. Tomorrow is a half day. Thursday is Christmas. And back to our regular scheduled programming on Friday. So there's that big gap. 68.95 and a quarter is the gap fill. We have a poor low in the overnight right here. So it seems like the inventory from yesterday and the early overnight session is starting to liquidate. So now let's see if it stays and holds that 69.22. Hmm. Now I'm going to draw the balance zones. I'm going to use this as a balance. Okay, so the balance is simply a cost basis. We're forming a new one right now, right? So you have a liquidation into bids from short sellers, right? They're the first to come in and buy. Then wholesale starts building a position above the short sellers. And eventually you get this move back up if the order flow supports, right? So let's go take a look. See what we got here. Draw a balance. And all I'm looking for when I do this, when I find a cost basis, I'm looking for highs and lows. And when you look below that low, you go right back to that high and then you go back. Does relative volume matter? It just tells me that there's more business going on. But I don't look at volume. You know why, kiddo? I don't really look at too much volume because I see it on the chart. Um, and volume is a tricky thing. Also, volume can be very, very, very misleading. Um, yeah, I don't look at relative volume. I really, because what I do for trading, because I'm a day trader or a scalper, um, I look to see where the immediate buying and selling is in a market so I can do some business in between. I have a very simplistic view of trading, and unfortunately, that simplistic view, I had to go around the whole, took me years. I went through all the complicated stuff, but I couldn't execute, right? There's so many things in trading that people look at, but what can you actually execute on? And that is the hardest thing, to differentiate what you can use and what you can't use. So what I did was I went back to the old days. So if I was looking at a stock, I'd be looking at who's selling it, right? And when they move, you move. Remember that song from the 80s? When I move, you move, just like that? Anybody there? No? Okay, I worked in clubs in the 80s. That's why. But you just watch the seller. The seller is going to set the price. Right now, the seller's found buyers. Here. And it's a small range, right? So the sellers found buyers here underneath 23 and a quarter, and they raised price to take advantage of it. Now, what we're doing is we're going to see if 25 and a quarter is where they step in and start competing. Make sense to you guys? Right. So what's the execution? Well, the execution is you're buying, what you want is for the market to go underneath 23 and a quarter, come back up, and when it does, that's where you go long. You put your stop here, and your target is 25 and a quarter. Now, in a slow market, maybe relative volume would help you understand that you might have some more follow through. You know what I mean? If you can use relative volume, and I've never looked at it ever, if you can use it to help you manage your expectations, then by all means. But for actual trade execution, I don't see how you'd use it. But to manage your expectations, it's kind of like knowing, is it really sunny out? Should I take sunglasses? Is it really cold? Should I wear a sweater? If you can manage, if it tells you the environment you're trading in and you can get good information off of that to execute, then sure. But for me, simplicity is key, right? It's taken me 12 years to figure out how to do this in a simple way that people can understand without overcomplicating it. Because as soon as you start overcomplicating this, especially as a day trader, right, you're going to have execution problems, right? So the first thing you got to think of is, what is the business reason I'm taking this trade? Now, most people have no idea what the business reason is. The business reason for taking a trade is either lack of supply or too much supply, right? This is completely different than investing, right? Investing is you're looking at a company and you're looking at its fundamentals and its market and all of that sort of thing. But when you're trading, you just need to find where the sellers are selling and where they stop selling. And then we just put an execution plan around that business transaction model. Okay? So the look below and fail is the easiest way to do that. It's the easiest analysis because it tells you the sellers came down here to 23. They saw that there were a bunch of buy orders here. That's why you don't need a DOM or anything because they'll tell you. So when the seller tells you where the buy orders are, they're going to raise price. So you know not to short 23. You know to go long. Make sense? Hey Raj, what are you doing up there? Good to see you. So right now, we are absorbing the liquidating inventory, right, into wholesale hands. And if the customers come in, we will redistribute into the retail flow for profit. If no buying comes in, they will further reduce price. Very simple. Because trading is difficult. So let's make the analysis simple. Because if the analysis is simple, well then all you have to do is practice your execution. So if you establish a cost basis for your product, this is the discount zone, 2 times discount, and then 2 times profit. And this is what we teach you in our trading room, right? We want you to actually earn a living. We want you to be able to pay your bills. You know, we want you to not be stuck in trades for hours, wondering what the hell's going on. We want you to know when is good to do business, when is not good to do business. We give you a little bit of financial freedom that way, right? Oh, swing trading? Ah, okay. Well, that's that's great because what you can do is you can swing trade using simple levels. For example, let's take a look at coin. Okay, say you're swing trading stocks, right? So, for example, here, when when the market goes from a level to a level, right? So when the market came here into this and established this cost basis, the trade for you would have been when the market looked below 47.30 and came back up, you'd be going long, 48, 49, and then you'd be looking for 96 as your target on a swing, right? You don't need TPO for swing trading. You can do swing trading this way. Your risk on this trade, depending on your account size and your thesis, right? So if your cost basis is 47 to 96, you got a lot of room in there, right? So check this out. You have options, right? When the market comes back up over 47.30, you go long here. You put your stop under 47. Does that make sense? So you're long, here's your stop, and you're swinging it up to the middle of the zone, which is what, 70 and change? 71.94. Does that make sense? It's simple. It's simple so you can focus on execution. Do you get that? So what that means is the sell orders that took the market under 47 are done, right? You let the short sellers come in and buy that and the wholesalers buy that. When supply runs out, it's going to go up and it's going to come back. And if it holds 47.30, you can be in the trade. You put your stop underneath, long, stop, and then you can sell into strength depending on what your expectations of the trade are. Simple. Is it easy? It's not easy. Nothing is easy, right? But it's simple. Does that make sense? What's the business reason for the trade? The business reason for the trade is that the sellout orders under 47 are complete. What does that mean? It means the market does not need to sell under 47. There are buyers present. So you grab some supply, and as those buyers keep coming in, you sell into that strength. And that's all you got to do, right? What we do is we teach you how to do this on a 1-minute candle chart so you get good at it. And that's it. Now let's see that point of control moves down from 31.5 down to here, right? It's about 2,890 contracts. You guys still with me? That example makes sense to you guys for swing trading? Yeah, what we do is we do the same. If you practice the same thing on a small time scale, you can learn the mechanics of the trade. Once you learn the mechanics of the trade, you can take it and apply it all over the place. It's wonderful. I'm going to correct you because you don't have to go that far. Remember how I showed you how to find this little blue area here? What you should do, kiddo, is just rewind what I've been talking about for the last 20 minutes and just zone into exactly what I said and do exactly what I say. Right? You can use a high volume node, but I'm telling you, man, it'll be there anyway. If I go and draw it, now if I go and draw it, you'll see that it'll back me up. It'll show you that there's volume. There's the volume, right? The rectangles are based on common sense, Simon. They're based on business. See, you guys, you have all these fancy things, average true range and volume nodes and all that stuff, but it's just based on business. When a market sells off, wholesalers go back and forth and create a cost basis. You guys don't understand this because you've never traded size. You've never made markets. So what I'm teaching sounds really, really foreign, but it's just a box where it shows where the sellers sell and stop selling. That's all it is. right? Draw the box, double it, then see if the levels work. If the levels work, take some test trades. If the test trades work, especially on this instrument, you can use the micro. If you're trading stocks, use small size and test the levels. No problem. Yeah. Just rewind it. What I'm saying really freaks people out because they've spent so much time learning traditional charting and patterns, and they've spent so much time being confused that when somebody actually shows them what's really going on, they're like, oh my God, I wasted all this time. And it creates a fried circuit in your brain. If everybody said that trading is simple and all you have to do is this, then they wouldn't be able to sell you stuff for extended periods of time, right? That's why at the trading syndicate we keep our price low so you guys have time to learn. My coaching program, my mentoring program is lifetime mentoring, so I only charge you one fee. So I work with you as much as it takes for as long as it takes, right? It's a completely different way of approaching this. If I'm going to take money from you, you got to learn what to do. And I have to be able to give you the time and invest my time in you. And it's the same thing for our trading room. We keep the price low because people don't get this stuff right away. They need time to learn. A lot of the times people need time to deprogram themselves because they've been taught all of this stuff, but they're not actually making money. So my goal is to simplify this so you guys can actually earn a living. Get in, get out, get paid, go enjoy life. Right? I started out on TPO charts. That's why I have them on here. The TPO chart just tells me this is like a map of the neighborhood. I mean, this is like the map of the city, right? It shows you where everything is. This is the map of the neighborhood that we are currently in. And now we are leaving that neighborhood going into the profit zone. So this cost basis is here. Now we're going to go and we're going to sell it. As we go, pretend that this is the warehouse, right? You're loading the trucks full of, I don't know, Christmas trees or whatever, right? And then you're going to take them and you're going to sell them to the store, at the store. That's all it is. And then all we do now, so say you're long 24, 25, you go and mark off where the sellers were the last time. They were up here, right? So you know if you're long at 24, 23, 23, 24, 25, you'll want to put some sell orders out, right? Why? Why aren't you holding until here? Well, you first got to get past 27 and a quarter to get up to 29. So if I was long 24 and you showed me a bid at 26, I'd take it. Now, a lot of you guys laugh at 2 points, but 99% of you don't even make 2 points a day and keep it. That's the tragedy. That's the tragedy of retail. They've convinced retail that you can make 5, 10 grand a day, but retail can't hold on to $50 a day. And that is criminal. If you can make 2 points on one E-mini contract, first you use the micro to learn, right? 2 points on one E-mini is $100. Big deal, right? That's what all you guys are saying. Big deal. What's $100, right? I use $100 to light my cigars, right? But If you trade 5 contracts, that's a $500 trade. You do that trade once a day, it's a 20 trading day month. What is that? That's 10 grand a month in income, right? How many of you are making 10 grand a month consistently? Think about it. Yeah, most of the promises on social media would have you making more than Buffett. They're all just lying to you. Right? Come with me. We'll teach you how to do this so you can make a little bit of money every day and then learn how to, size up. 2, 3 points on a trade is beautiful, especially if you're trading 5 to 10 contracts. 3 points is 150 bucks. 5 contracts, that's not bad. Especially when the trades take less than 5 minutes and then you're done. And then the trick is to not give it back. Yeah, kiddo, I don't watch the news, man. I have no idea what you're talking about. But sounds embarrassing. So we know we have sellers at 27, right? You can see them on the TPO chart and you can see them on the candle chart. So if you were long 24, 25, you'd be selling 26, right? Now London's opening. Let's see if London can hold that overnight low, right? That's what we're waiting to see. If it can hold that overnight low, it'll just go back and forth, and this will tell us the nature of the business now, right? Is there a lot of follow through? Because if London is really short, it will go and take out the 28s. But if there's not that much order flow, if it's kind of weak, not many people come into the store, you got to understand it's a business, right, folks? Order flow is what you're looking at. What order flow is the flow of customers that are coming into that particular market. The smaller the candles, the slower the business, right? So you get small candles, you get slow business, don't trade. That way you won't get stuck, right? When you look at stuff like this, right? Where is it here? This. Don't trade that. You want this, not this. Keep it simple, my friends. Keep it simple. Keep it simple and get paid. Complicate it, spin your wheels for decades. I know traders who have been doing this for 10 years who aren't profitable, and they go from system to system and indicator to indicator, trading guru to trading guru. They've spent thousands on education, and they are so confused by the time they get to me, and they've lost so much money. What's the point? Go do something pleasurable with your time. to help you succeed. That's all we care about. You know, we'll help you pass those funded trader challenges and get you paid. Yeah, sure, I can do that. But if you, I don't know, if you've been on my stream watching it, I do it every day. And if you look at my YouTube channel, um, I've got like 433 videos on my YouTube. There are videos on how to do that, just in case you want to maybe take a look. All right. Didn't I say if London is short, it'll take out the 28s? Where are we now? 27 and a half? Close. Right? Oh, over 28 and a quarter, you'll be looking for VWAP, which is 29 and 3/8. Sorry, sometimes I still use fractions. That's how old I am. I was trading before decimalization. Any questions? Yeah, you young guys don't know that we used to trade using fractions. Looking for 29 and change, which is where VWAP is. There's VWAP. So we didn't have enough product to keep selling it under 27. Buyers came in, right? The wholesalers lifted price. There you go. Pretty sweet, right? And that just shows everything I was talking about. Now, if you had a larger account, and I've only been watching this market since we started the stream half an hour ago. So if I was watching maybe longer and maybe I had three to five contracts long at 24, 25, right? And I sold most of them at 27. If I had a couple of runners, they'd be selling at VWAP. We only charge 20 bucks, kiddo, right? The room's only $20. So, you're going to spend less than that going to Starbucks, or more than that, I should say. Yeah. And when you join the room, we'll reach out to me. I'm around during the holidays. Well, not tomorrow and Christmas, but you know, through until the new year, I'm around. Last couple of years, we've shut down for 2 weeks. This year, we decided to stay in town, so I am around. Yeah, we have a ton of resources. Yeah, and when you sign up for the room, you get the AI trading coach for free. So you can't get a better deal than that. Um, a lot of resources. Thanks, Hyan. Yeah. Anybody else have any questions? Now, remember, okay, a little bit longer time frame. This is where market profile helps. It shows that there's an area of supply between, I don't know, 69.36 and 45. That's why yesterday's high is there. We kind of went into it, but really couldn't get much extension. Tonight's overnight high is just shy of yesterday's high. So if we continue higher, we are going to run into some resistance when we get here and when we get up here. So that can help you manage your expectations. If we get over yesterday's high, then this is that area. Your target will be 45 or 40 if you're using the 1 minute candle chart levels. So this is your cost basis, right? This is cost basis. This is 2 times profit, right? This is 4 times profit. Remember, it's a business, right? That's why, folks, that's why we call it a market. What do you do in a market? You buy stuff and you sell it for a profit. That's why it's the futures market, stock market, bond market. Right? We're there to sell you things. We create products to sell to retail or have you guys trade it so we can make money off of you trading it. And that's the business. How does vwap work? vwap is an institutional benchmark. So what does that mean? If kiddo, you told me, JJ, I want you to buy me 1 million shares of a stock, I'll try and get you prices under VWAP. If you tell me to sell 1 million shares of stock, I'm going to try and get you prices over VWAP. So if I'm a trader trading retail and I'm long here, one of the first places I'm getting out is VWAP. Now, if the market rips through VWAP and stays above VWAP, it means that there's a good amount of buying. And we're going to take this and we're going to sell it here now. You see? All right, we're just going to take this product and we're going to sell it up here if we hold VWAP. So this is under VWAP is where you acquire your inventory. Over VWAP is where you distribute your inventory. The difference is profit. That's it. Simple. I don't use VWAP to initiate trades. I use it to get out of trades. So say if I was short up here and the market came down to VWAP, this is where I'd cover. If I'm long and the market goes up to VWAP, that's where I get out of my long position. Simple. And this cost basis thing is just so you know where you are when you're doing business. Do you really want to be buying something that's marked up at 4 times cost basis? Looking for a breakout? No, that's for suckers. Smart money is buying and selling all the way up, right? It also tells you where the deepest discounts are, right? Big discount down here, right? So if it comes up down under 18 and comes back up, you buy some here and sell into strength, right? Simple. Good questions this morning, folks. That's pretty much it for me this morning. It's not bad now. It's actually kind of tradable. Do I trade prop firms? No, I don't. I recommend that you use them when you start trading so you don't blow up all your money. I wish they would have existed when I started trading. I trade my own money and I trade for some clients, for some old clients. I manage their money, but I don't use prop firms. Um, but I think they're a great resource. So you can learn how to trade and not hurt yourself. And once you learn, then of course you can, if you start withdrawing money, you can take your withdrawals and go trade that. I think prop firms are a great resource for people who don't know anything about the business. So, you pay your 30, $50 a month. Because in the old days, you'd put 2 grand in an account or $1,000 in an account and then boom, it's gone. You know, this way you can learn discipline because they have rules, right? I wish it would have existed a while ago. It's okay. Brendan, listen, we're all new at some time. Nobody jumps out of the womb and starts being a profitable trader, right? I have never seen anybody sit down and start trading who's never traded before. We all start at the same place, right? Don't let anyone tell you any different. Nobody is just a naturally gifted trader. That doesn't exist. It's not like those child prodigies that played the piano and you sit down and you can play you know, some, piano concerto, right? It's a skill, it's a business, and you have to learn the business and develop your skill, right? We all start at the same place, brother, right? When I started on the trade desk at my first brokerage firm, I couldn't trade myself out of a wet paper bag. You learn. The beautiful thing about being new is you don't have any bad habits, right? That's the beautiful thing. Like fresh, clean snow. You're unsullied. It's a beautiful time, right? You don't have any bad habits. So now what you do is, I don't know what that is. Is that some sort of is that like Mylanta or Tums or something like that? Is that some sort of an antacid? Gex? Take that if you have indigestion. Gamma exposure. Like the Incredible Hulk? No, brother. I've never heard of that. I've heard of people talking about GABA. No, it's for you. That's going to be about as useless as tits on a bull. Excuse my language. Keep it simple, man. Keep it simple. Find out where the buyers are, where the sellers are. All that complicated crap is you're just going to go down rabbit holes and you'll never get anywhere. Right? Join our trading room. You won't, all that shit, excuse my language, is all gibberish. Gamma, slamma, blamma, all that crap. Just learn how to trade, right? We'll teach you. And we won't use any overcomplicated crap. Right? I could see you've already been searching, right? And they have some fancy websites and they have, oh, we'll just charge you $300 a month or $400 a month. I saw this one of the guys showed me these guys who do volume analysis, and they're charging people $299 a month, and I read their stuff, and they were talking about volume analysis, and they had no idea what they were talking about. And I'm like, you have the audacity to charge people $300 a month, and the thing about them is they've never traded volume in their life, and they have the audacity to charge you $300 a month and say, "Oh, this information is going to make you money." What a scam, you know? It's brutal, right? How can you teach people volume analysis when you've never traded volume? Have these guys even worked 100 Have they even worked 100,000 share order, a million share order? Have they ever sold 200 million shares over 3 years for a group of investors? I have. So when I talk about this stuff, I know what I'm talking about. I've taken 200 companies public, right? So, and we only charge 20 bucks a month. Because we're actually interested in you making money, not taking your money. Well, here's the thing. You can try us out for 20 bucks. And if you're dissatisfied, there's no commitment, right? And you've risked $20. You'll spend more than that at McDonald's. Well, in the UK you will for sure. Oh, well, my friends, the time has come to leave you. Thank you so much for being with us. Come visit us at thetradingsyndicate.org. Have a wonderful Christmas. Have a wonderful holiday. If I don't see you guys in our afternoon session, we do another session at 9 a.m. Eastern Time, which is 2 p.m. here. And we have something very, very cool coming next year. We're working on software. One of my guys in the room, we have this guy in our room. This guy is like seriously smart. He's like scary smart. And I told him an idea I had to develop a software that puts you in the chair of a market maker so you learn how to trade size, which will help you learn the business. And I just looked at his stuff yesterday that, he's on his second version of it. And once that's done, that'll totally change things. It's wonderful being surrounded by smart people. Thank you, everyone. Have a wonderful holiday. We'll see you later this afternoon, and if not, Merry Christmas. And I'll be back Friday. Thanks, everyone. Bye for now.